Welcome to Bearish. We're not financial professionals, and this is not financial investment advice. Enjoy the episode.
Dude, when we're like 80, like millionaires are going to be normal. Like, I feel like there's just going to be so much money in circulation.
It won't be the same though. That's the issue.
Yeah, that's what I'm saying. Like a millionaire will be a normal. I mean, this is probably way later, not when we're 80, but like a millionaire will be normal. You know what I'm saying?
Mm-hmm.
It's like. Yeah,
like the minimum.
That's the benchmark now.
Fairly normal, to be honest with you.
Yeah, like it's just gonna get even more because
like, millionaire normal, bro. What?
But it's just gonna get like so.
When you
normal.
live in a place like Atlanta, like, and you just walk down the street and you're like, oh, you're a millionaire, you're a millionaire, you're a millionaire.
Who are you talking to, Logan?
Same in New York.
Well, I mean, yeah, but when I walk down the street,
condos,
when I walk down the street,
people too.
Avon, I'm like, oh, well, he's probably not a millionaire.
There's also people in tents on the side of the road, so
yeah,
you gotta count.
It's a good combination, yeah.
It's a little bit of both. No, but like, you posted something about minimum wage being raised, right, on the story?
To $15 an hour, yeah.
No, I don't think people understand that raising minimum wage just raises the price of everything else.
Because where did he get that money from?
Yeah, like a gallon of milk is, I don't know, it's at like what, like $3-4 right now?
Something like that.
Yeah, it's gonna be like $8, you know? Everything just rises with it. You're not technically getting more money. Everything just gets more expensive relatively. It's the same like with free college. Like
exactly.
Like, where are you going to get that money from? And raising minimum wage are like the same exact thing. Like people are like, oh shit, we're going to get more money. Oh shit, we're not going to have to spend as much money. It's like, no, it's just going to be taken from somewhere else. Like people without financial literacy see it and like, oh, that's free college. It's not free. You're getting taxed like ridiculously.
It sounds good though.
Oh yeah, it sounds amazing. But it's like nothing in the world is free. So it's kind of like,
and a lot of people were talking about the student debt being erased, and Joe Biden actually said, I'm not going to do that, so let's relax.
It won't work.
It just wouldn't. Well, he said $50,000 of student debt he won't do. I don't know about the 10. The 10 he might, which would be nice, but like you said, it has to be replaced somehow, I think. But I mean, I'll
the only way it would work.
I'll take the 10 grand off.
The only way it would work is if, right, if like it didn't come from the colleges saying like, okay, we're not going to get paid back because at the end of the day, they're a business. It'd have to be the government being like, okay, these loans that we gave out are just erased. That's the only way it would work. And who is like the government? It's not going to happen.
Because
that is the only way.
There's a lot of loans. I don't know the percentage, but a lot of people default on their loans anyways. And if they pay up to a certain amount for a certain amount of years, they're automatically forgiven no matter what. Even if the total amount isn't paid for.
Right.
So I don't really know what's going on with the financial system of universities. Like I don't really know how they're doing it. It's a little
same
confusing.
Thing like free healthcare too. I don't know. People just kind of like, oh, this country does it. They're great. Like look at.
It's just a lot of taxes.
Yeah, it's like it's coming from somewhere. It's just the way they frame it. It's all about perspective.
It's crazy how easy like they're tricked. It's like, yeah, we want free healthcare. It's like, okay, well, how are you gonna do it?
Yeah, those workers got to get paid.
Where are you gonna get the money?
That equipment has to be paid for. It's like it's not like it's like poof, we're good. Give me a surgery now.
Yeah.
Unfortunately, it's not how it works.
Yeah. Back to like the Phil Town video because I completely fucking botched it like big time. The hyperinflation, I got confused with hyperinflation and deflation. Hyperinflation is like you guys said, the value of your money is being decreased rapidly, and I think that's anywhere from like if the average is 3, like if it was double digits, that'd be bad. But deflation is where it gets really bad, but I don't exactly understand the concept of deflation. But Phil Town was saying that you could see deflation. And that could really like catapult us to economic catastrophe, and then you could see negative interest rates, and then
I don't understand how that works. How do you have negative interest rates? And I don't even understand the concept of deflation. Like I know what it is, but how do you actually do that?
It's pretty much like the government saying, "Here, have money," so we can stimulate the economy.
Wouldn't that be inflation?
Well,
that's what they're doing.
You mean
they
like
just gave out stimmies, bro?
No, but but I don't know how. I don't know.
Yeah,
Either
it's
way,
like
it's
they'd almost
bad.
have to like
Either way, it's bad.
take away dollars. It's like a stock buyback.
No, if it's negative
makes-
interest rates, it's almost like you're getting paid to take money. Like you're getting
Oh, I see what
paid
you're saying.
to
Oh, I see what
get
you're
a
saying.
loan.
Yeah, because when you take a loan, you usually pay an interest rate, and then you
Yeah.
borrow $1 million but pay a million 100,000.
And he
But
said
this
that
one-
would stimulate the economy, which why wouldn't it? But then he said that doesn't last. And
So is it saying like negative interest rates? You borrow $1 million and pay back 900K.
I don't know. Maybe
That's what it would sound like. But
that's what.
I
Yeah,
think so.
you
It'd be
take
people would be
back.
borrowing
yeah.
like mad.
Well, exactly.
Why
Who
wouldn't
wouldn't
you?
borrow then? And then that's where it gets
You just
tricky
profit.
because, yeah, but then you're ruining the banks and the government. Like
you have
they're
more
just
money to spend and
So?
pump into the economy.
yeah, and then
but-
that's where, and then he goes, yeah, the stock market would absolutely shoot up, and then it's just getting off the horse.
True, there would be so much borrowing.
Mm-hmm.
Who wouldn't? Anyone,
Exactly.
any
Well,
Joe
no,
Blow
who-
that
it's
could
not who
borrow would
wouldn't.
borrow.
Yeah, it's not who wouldn't. Why wouldn't you borrow?
Yeah,
Yeah, you
There'd be-
like you'd be silly to borrow.
you
Not
literally
to
just
borrow.
pay it back instantly. You'd borrow $1 million, pay back 900 grand, and then
Yeah,
just walk
but
away.
then I mean, are we correct? Are we accurate on this? Like,
right? That can't be
are we
true.
sounding stupid?
How does
Mike, do you want to like
deflation work?
fact? Well,
There's
it's not
probably
deflation;
more
it's
to it.
negative interest rates.
Not negative interest rates. Look up
Yeah.
whatever that is.
Well,
Yeah, but what I'm looking at, like Max said, I looked up what is negative interest rates just to make sure we were correct. And via Investopedia, we actually were correct. Good job, guys. If you take out a loan at a negative interest rate, you don't pay interest on the amount you borrow. Instead, the lender would pay you. The reason this would happen, because it would encourage people to buy homes, use credit cards, take out other types of loans, and this would stimulate and help the economy. And then I looked up deflation because it fucked with my head. I didn't really know what it was. Deflation is a sign of a weakening economy. Economists fear deflation because falling prices lead to lower consumer spending, which is a major component of economic growth.
So it sounds like you need inflation.
Well, I don't know if you need it. I think the Federal Reserve likes to keep it at around 2 to 3% because I think it allows companies to raise prices, right? But in deflation, it says companies respond to falling prices by slowing down their production, and then that would lead to layoffs and salary reductions. So deflation, I think the country would have a bad time. Yeah, so
Bad
deflation equals bad, but so does hyperinflation. That's not good either.
That doesn't even make any sense. When interest rates turn negative, this means that lenders have begun actively paying borrowers to take their money. Why
No.
wouldn't anyone lend it?
I just explained to you why. Because it would help. It would give people incentive to take out loans and spend more money.
Which
would
stimulates
stimulate
As
the
a
economy.
bank, it's like, no, that's my money.
Yeah, but
I
the
just don't-
economy's. I mean, I understand. Like deflation is not good. Like that would be bad. That would cause the market. It would shoot up real fast, but it would also tank real fast right after it shot up. Because I mean, you can't have deflation forever. It will just absolutely cripple your country.
It'll drain the money out of the banks because they'll just pay everyone for the loans.
Right, and then that would. It sounds like it literally causes a financial crisis. Sounds like
Yeah.
in 2008, everyone took their money out of the banks, shit hit the fan, and then like markets crashed and yada yada.
Well, those were the adjustable
Sounds like
rates.
this
So
will be
the
it.
the interest rates shot up after like a certain timeout, right, Jared? And so they got the loans at like a really low rate, but then in some clause inside of those mortgages, they shot up because they were adjustable.
But yeah,
amongst
you don't
other
want to do
things.
You don't want to do. I hear music. You don't want to do an adjustable rate mortgage. I'm sure there's pros to it, but if interest rates are really high, you might want to. But right now, nobody's doing an adjustable rate. You're just gonna do a fixed rate mortgage because they're so low right now. If they're super high, you're gonna want to because chances are they won't keep growing. You know, they're gonna come down, and that would be in your favor. But yeah, I saw something on the stock app about why the market's acting a little weird. By the way, I'm like completely changing topics.
That's okay.
I think one of the bond or mortgage rate yields went up way quicker than was forecasted. So I think one of them went up to 1.3%, And as we were saying earlier in previous episodes, the interest rates on bonds and certain mortgage, whatever, were below 1. And one of these companies or whatever forecasted that these rates would reach 1.3% by the end of 2021. And it's only February, and they already reached that. So I think that's why the market may be acting a little weird right now.
You mean like the past like week or two? How it's kind of been like finicky and majority negative?
Yep. So
yeah, it has been.
Max, we were always talking about the market could crash if interest rates rose, right? Now I'm starting to think it may not be the level at which they rise, it might be the pace at which they rise. That might spook people a little more.
Right, because I feel like retail investors, we kind of ride the wave. And when these big guys see interest rates moving, they take out a lump sum. It doesn't happen fast, but they take out a massive amount of money from equities and move it into bonds. And that kind of escalates the whole process. And when it's like a domino effect, when somebody sees it, everyone follows. And it gets uncontrollable at that point. And if something happens quick, the market doesn't like uncertainty, and it seems like that's exactly that. And then it just goes downhill from there.
Yeah, the 10-year Treasury rate is at 1.3% now. And I wish I knew where I saw this article so I could look it up, but it was only forecasted to reach this at the end of the year. And the fact that it reached it already, I think it's starting to not scare. I mean, yeah.
It shows that it could go even high, like go do it again by the end of the year. You know what I mean? Like it's just going to keep on going.
Yeah, and like you said, people will pull their money out of stocks if it keeps going up.
Quickly. Was that Mike?
Yeah, older people.
I was going to say, could you explain the difference between moving your money out of stocks and into bonds and what the difference is?
Well, bonds are like risk-free securities, right? The U.S. government will pay you back. Mm-hmm. So with stocks, you may have it's a higher risk, higher reward situation. You may be able to make more money, but you're taking on risk of losing your money, right? If you put it into a bond, you're not going to lose your money. You will be paid that rate at the end of your when the bond matures, right? The problem is, like we've been talking about, it's so low right now. It's not worth it. Mm-hmm. You're really not making any money. That's why everyone's in stocks.
And younger people, ones that don't know as much about the stock market, they're not even going to mess with bonds because there's yield to maturity, there's
they probably don't
different
even know
percentages. Yeah, that's what I'm saying. There's so many different things, and they're more willing to take on risk. Mm-hmm. Whereas, say we're in our 40s and we have kids and we have loans and we have bills, you're gonna put your money in a bond because it's guaranteed money at the end of the year. And it's also just happens to be that when you're 40, you have a lot more money than what someone like us would. So when those rates change and these adults and big-time hedge funds start taking out their money, it's a massive movement in the market out of equities into bonds, and it just kind of spirals.
And think about this, Mike. I'm just going to give you a personal example. When you're nearing retirement, would you rather have, and you have a good amount of money, would you rather have it into bonds at a 5 to 6% yield or stocks a 7 to 10%?
Stocks all the way, baby.
No. Okay. No,
well, you got to explain the risk too.
It's
a possible 7 to 10, but it's a possible downside of negative.
7 to
your
we
whole
may
entire
not want
money.
bonds. We like stocks, so that was a bad question. But older people nearing retirement or in retirement, chances are if they're okay with money, chances are they're going to put them in bonds.
Yeah.
Because they don't really need
you won't lose
huge growth in the stock market. Yeah, you're not going to lose it.
And also, they don't have as much time to watch the market. They're like, I'll just put my money in there and not look at it.
But it is a huge jump because, I mean, only a few episodes ago, we were talking about them being like 0.8%. You know what I mean? And now they're 1.3%. So they are.
That's pretty quick.
They are jumping. That's what I'm saying. I don't know if it's the level at which it will go to eventually. I think it's the rate at which they change. Might spook some people a little
What
bit.
were normal pre-COVID? Do you know?
Probably around 2 to 3%. They weren't high.
Yeah.
They weren't very high.
And now they're already halfway there.
Yeah, they're close. But like, I just wish I knew what they were before and after the 2008 crash. I'm sure there was a big drop. It was probably 6% before the 2008 crash, and then once it crashed, they probably dropped them to around 2, maybe 1%, and then they probably hovered around.
Much.
They hovered around 2 to 3%.
Yeah.
In the 1980s, the market was in a bear market for a while, and interest rates were around like 12 to 13%.
Jeez,
dude.
Why wouldn't you?
Exactly. That's why the market was in a bear market during the early 80s.
It's crazy how much control like higher ups have over everything. You can flip a switch.
If I was in the 80s, I would put all my money into a bond.
Oh, you wouldn't even mess with it.
No, you'd put no money in the stock market. You'd be silly to.
That's kind of crazy how much control and power like above, and you just kind of get hit with stuff and react.
You just kind of deal with it.
Yeah, it's kind of like.
And this is what the episode was like supposed to be about, and I guess we're transitioning into it really well. Is how we think the future of the market's gonna look. And I want to know your guys' take. We'll start off with you, Mike. Give us your take of how you think the market. Let's just give a 3-year window. How do you think the market will perform in 5 years? We'll do 5 years. 5 years.
Obviously, I can't tell, and we're not financial professionals. Right. I think the hardest thing about telling is knowing all the metrics.
Yeah, we are.
No, we're not. Don't
listen to everything.
That's why we have that disclaimer at the bottom of the video. No, right. I think
ignore it.
I think the hardest thing about answering this question is knowing all the metrics. I even find myself when I looked at today's stuff, I was having such paper hands because I didn't even realize that all the things
I was having paper hands. Side note, they went on CNBC and put all the lingo from Wall Street Bets on there.
I put it on our story.
Explained them. That's actually
the funniest one was tendies, and it had a colon. It said chicken tenders, and then in parentheses.
I didn't even know what tendies necessarily meant.
Yeah, profit. That was funny.
Yeah. Short answer, I don't know because I don't know all the metrics. Long answer, I don't know because I don't know all the metrics, and I wish I did. Because then I'd be able to answer that question better. A few more words.
More words added on to that.
It's weird. It's weird that it doesn't. I don't think it makes sense because we don't know all the things that are at play. At least I don't, and that's why it's hard for me to answer that because it's like, why did the market move down today? Well, there were a few things that happened. You said the bond rate went. Yeah, he tweeted. Like it really depends.
That's what's controlling it.
But I think if I had more inputs. I don't have as many, let's put it this way. I don't have as many inputs to judge right now because I'm so inexperienced. That's me talking from a noob's perspective. But if I had more inputs to judge, then I could tell. I'm sure if you ask Dylan the same question or anyone else who watches the market
he'll talk about price.
Because
the resistance and the support right there.
He's saying it's freaking going to the moon, dude.
That's my answer. That's my
bullish
answer.
for life.
Oh, that's a safe answer. Fair enough. I respect it.
I can't answer it because I don't know, and I don't want to just shoot. I don't want to answer it because I think I know.
Okay, I want to answer last. Logan,
okay.
What do you think, boss man?
In 5 years?
Yeah. Let's give it some time.
I think
5 years.
I think I want to start playing the long-term game because like really long. I don't think 5 years is long-term, but longer than that. I think that's what I might just start doing and just start letting it grow year by year, just at a slower rate obviously than maybe if I was doing day trades. But I think in 5 years, I think soon definitely there's a major correction coming. I think it's inevitable.
I have a juicy add-on. In 5 years, do you think the Dow, it's more likely for the Dow to be at 50,000 or right where it is right now?
Do I think it's more likely?
50,000 or right where it is?
It's at 31 right now, right?
Yeah.
30, 31.
Yeah.
Now that could be, trading sideways or big crash.
I think
it just came back up.
I think it's more likely for it to be where it is now.
Okay.
Are there any...
Right, Max, what do you think?
Hold on. Are there any existential problems in either the economy or the yeah
well, yeah, dude.
Well, thanks for reminding me. That's why I asked.
Yeah, dude.
It was that or anywhere politically that might push this, because you have to look at the time frame. I mean, presidency is one thing that influences it. What we did now with like inflating the market, so it wouldn't tank, right?
Mm-hmm.
We put more money into the market so it wouldn't go down. As after the pandemic struck, we printed that, what you say, 30% of all of the money we've ever printed.
35% of all the money in the history of the world.
So that needs to be taken into account.
Woo! America.
In 2020, dude, 1 year. That's crazy.
Yeah,
It's nuts.
So
No, to be what I think is we're in unprecedented times. We're in a transition of a lot of different things. We're in a transition of a lot of inflation, a whole world pandemic, radical presidency change. There's just a lot of, also the workforce is going to look completely different because of what COVID has done. We're all on the college is going to look different. There's so many different factors that within a couple of years are going to look total 180 from what it is now, that it's kind of hard to say, you know what, this is where it'll take us. What I will say is when it does hit the fan, whether it's in 6 months, a year, or 5 years, I believe it's going to be, again, like we've been living in history. It's going to be historic. Yeah, it's just going to be like, it's going to hit the fan and no one's going to know what to do, and it's going to hit hard. You know what I'm saying?
Yeah,
it just seems like it's going to be just falling in line with making history that has been 2020 through where we're living right now.
Yeah, because why wouldn't it, right?
I mean, it just makes sense. It seems like you can't exactly predict it, and if we could, I mean, we'd be millionaires. But when it does happen, I have a strong feeling that it's going to be nothing like we've ever seen before, and it's going to be hard times for a good while, unless you've saved up and you've saved for a rainy day and you kind of play the game and buy everything on sale. Sale of a lifetime. Isn't that a book?
Yeah, I read it.
Okay, there you go. It's going to be that.
Just that dude was nuts. He's pretty much saying that we're in the debt bubble of a lifetime, and he's not wrong. Like,
right, you've said indicators and stuff before that we're in like 2, 3, 4 times of rates that aren't good, that you don't want to be that high, that are that high. Big old bubbles, and it's gonna blow.
Okay, so my answer, do I think it'll be? I think I'm gonna agree with Logan. Actually, I don't know, because Max, you were right. In my opinion, you're right, because whenever it does happen, it's gonna be crazy, and it's gonna be historic. But I also agree with Logan that there's a better chance, in my opinion, that the Dow's like where it is now than 50,000 in 5 years, just because of all the stuff you said, Max. And Logan, when you said that you're gonna start thinking about long term, that's good, because in the history of the stock market, the fact of the matter is they go up, right? But for me, at what point do I want to buy? That's the thing. Because if we think something's going to happen, I don't want to buy right now. Even though you are thinking 10, 20, 30, 40 years down the line, I think right now.
Right now we're in a phase where it's almost like cool to be in the stock market. Like Aiden sent that picture the other day of that girl on Tinder, and her bio was, if you don't know what Wall Street Bets is, don't talk to me. Do you think that girl knows what the fuck a stock is? Do you like honestly? Do you think a lot of people know what a stock is? They just get on Robin and swipe, and yay, this is fun. Green lines. It's like it's just a phase. Once this phase kind of fizzles out, is when we're gonna see things kind of transition into something new.
Yeah.
And until then, like Elon Musk today, I think it was, he made like physical Doge coins. And Doge shot up like within
joke, bro.
Yeah, within 5 minutes, like the graph was like this, and it just went boom, and then it just came right back down. And it's like, because he made a coin and posted a picture of it. It's like once this meme phase kind of wears out, which it will.
It will.
Yeah, once that goes away, that's when we're gonna see stuff start to change. But until then, look. There's so much bad news coming out, and things go up. Like,
it's
GameStop's been dead. It reached 400. You know, AMC, no one's even going to movies. It reached whatever it reached. You know what I'm saying? Like, it's just kind of like jokes, haha, this is fun.
But this is so hard because the market we know is not based on any rational sense of anything, right? It's a lot of memes and it's just a lot of buying, right? So the way I've learned and read and all that stuff about stocks is they're tied to the business, right? If the business earns money, then you earn money, okay? So like that's how it works in a traditional sense of investing. But right now, it's not. It's like people are just trading stock certificates, and it's just the name, right? It's just Tesla. It's like I have a share of Tesla, but you're not really having a share of the business. You just have a share that says Tesla on it.
It's almost like an accessory.
And what's funny?
Yeah.
What's funny is, for the past I think year, almost exactly, maybe a little bit more, since I've been doing investing, that's all it's been.
Mm-hmm.
Ever.
Yeah, and
stocks have done nothing but go up, regardless of earnings, regardless of anything like that.
It's just typically not how it works. And Warren Buffett, he explained this really well in one of his videos that I've watched. It's when he buys a share of a stock in a business. For example, Verizon. He just bought Verizon.
Yeah.
The fact of the matter is, Verizon's like an amazing company, right? And they own like the cell phone service. Like they dominate it.
Mm-hmm.
But he was made fun of. You know what I mean? Like on Wall Street Bets, Max, you remember? Like you sent me that meme, and it was the Joker, but it was like Warren Buffett's face on the Joker, and it was like, call me Joker now. Yeah, but
you also bought Chevron, and people were like, "Oh, you don't care about the Earth." I don't know. They're just linking stuff with like,
yeah,
I don't know.
But the way he invests is just not how it's happening right now. You know, it's just when if I were to buy a share of Apple, I would want their earnings to go up, right? Because therefore I'd feel like I'm making money. If they're making money, I'm making money. That's how it works, right? There's some companies that are not making money and are shooting to $70, $80. And those people, and it's not really like you're investing in the business. It's just like you're buying a stock certificate of a company.
It's literally a casino. They say it like jokingly, but it actually is.
Yeah, so it is. So at what point?
Blackjack.
That's why I don't know. Because at what point will these companies not produce what like these evaluations are saying they will? You know what I mean? But at what point will maybe that will never matter? Maybe it doesn't matter right now. And who's to say it will matter ever again?
That is true.
That's why I don't know.
We say it's a phase, but this could be like we are the next generation, and like not trying to be morbid, but all these older people are gonna die, and we're gonna replace them. No, seriously, like the old stuff is gonna be buried in the past, and our ways of learning.
It's almost like
replace it.
It's almost like we're gonna set the standard for how the stock market works, and so it'll stop. Yeah. It'll stop being about actual earnings, and it'll be more like an accessory, like the way it is now.
Right, and we're in times that we're impressionable, and we're not gonna know any other way. It's like, what's like value investing? It's like, no, let's just throw it in there and hope it goes up. When it does, take it right out. I don't care what company it is. Like these are things that can't really be untaught, and then you're just gonna compound on it when you're older. So it's like we say it's a phase, but who knows?
Exactly. That's why it's just super murky waters right now. I have no clue what's gonna happen. A new breed
of investor has entered the market, and
it literally has.
That's going to take over the majority of investors, and so they're, especially with presence of retail investors, and that they behave a lot differently than most. Well, yeah, they behave a lot differently than the current population.
I was talking to my dad, and he made like kind of like an interesting kind of perspective of it. Think about sports that haven't really been like sports just ended, right? Like what's on right now? Like who's really
basketball?
Yeah, but
soccer,
who's really
Champions
really
League
watching? But gambling from a gambling perspective.
Oh, I'm sorry.
People will gamble with basketball, but not as heavy as football.
Right, and so it's kind of like even during COVID when gambling there was no sports at all. Those gamblers, they still have an itch to gamble. So it's like, who says they weren't going into the market? It was Dave
They
Portnoy.
absolutely
It's literally
were.
what he did. Who said he wasn't going into the market and being like, okay, let's toss around some money. Football came back. It maybe died for a little bit. Football's gone again. And, GameStop goes skyrocketing. You know what I'm saying? Like, I'm just using that as an example. But who says those gamblers haven't gotten, like, a little itch for it and said, we have tons of money. Let's go throw it in here. It's just like a whole bunch of people coming into it that don't really know. I'm not saying that we're the most amazing people at it,
right.
but like just new people and just kind of, flinging money, rolling the dice. I think it's interesting.
Yeah, it is. I honestly, that question is tough though. Like, a lot of the big investors, they all invest the same way, but with these hedge funds, who's to say they won't just completely throw out the fundamentals and just start trading like how we trade? If that's the only way to make money.
Right. It's like you can't beat them, join them.
Yeah.
There's also
it's
this,
like,
guys. You know how our
it's happening,
generation.
why not join?
Do you know how our generation is focused on like this influencer culture and how like teenagers / young adults our age really like people. They follow people and they value people and the content that they make. It's almost the same. It's almost the same way with a stock where it's like, if let's say an influencer promotes it, like for example, there were some people like Elon or there were some social media influencers tweeting about a stock, and it blew up.
Saying Doge,
and it blew up.
Little Yachty, bro.
Lil Yachty did.
He was on.
He was on Doge, and then they blew up the. So you see how there is an influencer market there's an influencer market influencing the stock market. And
there's so many different factors in it.
What I was trying to bring up with that point is that we have a different value system. People like us have in our age, maybe millennials and younger, a little bit younger than millennials, we have a different value system when it comes to how we work, and that's because we grew up on social media and we probably have different perspectives on what we value. So that might change the way that we look at stocks. And that might change the way the market works once the majority of investors think that way. Unless the financial systems are so well constructed and have such strong foundations that won't happen. But it doesn't look like that's the case based on what's been going on with all these meme stocks and so on.
Right now, it doesn't look like the case. You're right.
No,
it doesn't. It doesn't look like it'll change. But a very dangerous thing to say is this time it's different. So you don't know.
Yeah.
You don't know.
I still think it's quite fascinating to think of a stock as more of an accessory than an actual security.
Yeah, because when we did that episode, that was our second episode, we said when you buy a stock, you're buying a share of a business.
Not anymore.
But like right now, most people aren't. You're not, because no one's gonna listen. No one's gonna look at their earnings and say, "Oh, okay, yeah, they made this much. They grew by this much.
I believe in this company." No, it's a socially generated. It's a socially fabricated sense of value. Like Wall Street bets, when they say I like a stock, they socially fabricate the value of that stock, and then as it's consumed through social media, its perceived value goes up. This is what I was talking about. Like when people look at social media, their value systems are intrinsically intertwined with what they view on their phones and what they view on these social media platforms. So it's almost like their value systems are being molded into a different form, and therefore it's causing the market to change as a result.
Yeah, I think this is just my personal opinion, the biggest stock that's benefited the stock that's benefited the most from this is Tesla by far.
Probably,
it's got to be Tesla, right? Because with Elon Musk, tweeting, stocks goes up. Elon said, I remember this. He tweeted, I think Tesla is overvalued, and the stock tanked.
Yeah,
this was in 2020 sometime. The stock tanked. It's just crazy. For example, just to go into Tesla a little more, super quick, they sold around 500,000 cars in 2020.
Yeah.
And they're more than a car company. I understand that. They sell solar panels and energy. Right. GM sold 7 million cars in 2020, and one stock is at $800, and the other stock is at $50.
Yeah, but the potential, bro.
I read somewhere that they made less money on actually selling cars and more money on like investing in like Bitcoin. I think it was, and they just put like Bitcoin. They just put that amount into Bitcoin like 2 weeks ago.
Imagine when they reach GM status. Imagine if they reach GM volume and GM status in terms of manufacturing, because they will get there. They will become better, if not the same.
But listen to this: with Tesla, their market cap, they are worth more than every other car company combined, and that's crazy to me.
That's cool.
Like GM, and with GM owns GMC, Buick, Cadillac, and Chevy.
They own
all these car companies. Yeah, they own all these car companies, but Tesla's shitting on them right now.
It's just Elon and his ideas and what they have their hands in so many different piles.
Yeah.
Like they really do. It's not just a car. So much more.
One thing he did right though is we always, how we keep saying it's a meme market.
Mm-hmm.
People literally call him like king of the memes. Like he's
meme
done
lord.
everything right. Yeah, meme lord.
Daddy Musk.
Bro,
it's so
he
crazy,
has stocks at the tip of his fingers by tweeting.
People are just. We live in a time where people just take the piss out of anything. Like that dude is in a hearing in front of Congress and says, "I am not a cat." Well, no shit, you're not a cat. You know what I'm saying?
It's because he's roaring. Kitty,
I know, but
so
the fact that he even says that, like it's just mind blowing. Like it's like really, he went up there straight face. I am not a cat. I am not a financial advisor. It's like okay, those are two opposite ends of the spectrum.
Elon tweeted something.
He's not a cat.
Elon tweeted something. He said, pertaining to Doge, the most entertaining outcome is the most likely.
And I think he's saying that that's going to be the crypto of the future rather than Bitcoin and Ethereum.
What,
But
Doge?
that, I think,
Yeah. I think that's what he was saying with that, and then
to
that's
be
why
honest, it
blew
wouldn't
up.
be surprising right now. It just wouldn't be. People are way too like, yeah, we have a lot of Doge. Funny name, dog. Like, what? This just doesn't make sense.
do you guys remember? Did one of you talk about the idea of people investing in a person, not a business, but like with influencers?
That'd be sick.
Yeah.
Imagine a future like that. That sounds like something you could get.
That probably will happen.
The current generation.
We need to do an episode on that. That should be the next episode. That should be the next episode.
Yeah.
Investing in influencers. Yeah.
I think that's a great.
Because how do you incorporate them? How do you treat them?
Yeah, I don't want to say anything. But like, I would put so much money into like Logan Paul because that dude just
Mr.
makes
Beast.
money.
Mr. Beast, bro.
Yeah, Mr. Beast. Oh my God. Yeah.
Casey Neistat.
No, we need to.
My first investment.
Oh, this has to be in next episode.
Yeah. This has to.
If influencers were stocks, who would you invest in? It's a great question.
Great. Well, then let's do it.
So we got next week's episode planned out, and this time it's not the day of, so we're ahead of schedule.
We actually didn't even plan anything this time. We just kind of. Jared's been kicked out of the group chat since like Tuesday, and we don't really know how he left. And then we just figured it out today. It's been like 4 days, and we're like, oh wait, he's gone.
But I was still able to text, and it makes no sense. I just wasn't getting any responses.
Yeah.
So I texted Mike. I was like, dude, why aren't they responding to me? I thought you guys hated me. And Mike was like, well, they're like drowned in homework, man. I'm
You
like,
just kept on sending out of context text.
Yeah, I understand.
Like as we were all talking, I was like,
busy.
Well,
Yeah.
it kind of
Okay.
made me sad because you'd say something, so then we'd answer, and then you
And then
wouldn't
you
say
wouldn't
anything
answer.
back. So I was like, he hates me.
it was just a big miscommunication.
literally.
I was talking to Kylie about it, and I was like, yeah, this is like the second week in a row it's happened, and I just don't know what's going on. Like, do they even want to still? Like,
You literally were like, dude, why aren't you answering me? I was like, I'm texting you right now.
Yeah.
We answered multiple times throughout this week.
and we resolved the issue, but Michael kicked me out of the chat. So
It literally did say Mike kicked him out of the chat. I was like,
And I don't know how it happened because I think during that conversation, I was like reading the messages on my Apple Watch or something. There was a very interesting conversation going along. Yeah, now there's beef apparently.
yeah.
But I don't know how it. I honestly don't know. I don't remember doing it. I would not do that intentionally, so I'm not sure how it happened.
no,
Never.
You're different, bro. You've changed.
did it accidentally.
You become a podcast host, and you think
I'm a double agent.
There's a lot of buttons you got to push to kick someone
That's
out.
what I
That's all I'm
said.
gonna say.
I said-
You gotta
I
scroll,
I
hit
said-
their name,
I said, Mike,
scroll some
I'm just
more,
gonna
then
click.
hit. Yeah,
Gone.
right.
I
You gotta
said,
hit
Mike,
about
how do
4
you
buttons.
accidentally kick someone from a group chat?
Well-
He goes, I don't know. That's what he said. He goes, I don't know.
And then not recognize it.
I just
we
don't.
literally commented on it too. We were like, "Damn, he's gone." And then you texted, so I was like, "Oh, he's back." That's what didn't make any
It
sense.
was weird.
The kick didn't even work. So the kick didn't even work because it didn't even kick him.
It like halfway worked. Seriously.
I didn't get any messages, and I looked today, and like Bearish wasn't even there. Like it wasn't even like on my messages. Like it was just
Apple just deleted him.
iMessage is bugging.
Yeah, it's bugging B.
Hi guys, we talked for a while.
it's
Okay, that was a good comment.
Outro man.
I got you.
This is your time to shine.
Thanks. All right. What do I say? Oh yeah, thank you guys so much for thanks guys for watching this episode. We really appreciate it.
Don't worry, his voice will crack. I got $20.
It will. Yeah.
Hey.
And it will be.
I bet you $20 right now. I bet you $20.
All right, go ahead, Mike. We're all watching and listening very, very closely.
And I'm going to execute this perfectly. Thank you guys so much for watching. Hopefully you guys enjoyed the episode. If you did, make sure to leave a subscribe and leave a like on the episode so it helps us out. Also, don't forget to hit the notification bell so you get push notifications straight to your phone. If you're listening on audio, don't forget to follow us on Spotify and on Apple Podcasts. And please leave us a rating on Apple Podcasts. It lets us know you're listening. And finally, if you want to get engaged with us, if you want to talk to us, follow us on Instagram, TikTok, Twitter, and Discord. Hop on that server and ask us some questions. We'd be happy to answer them. And with that, hopefully you guys enjoy the episode. Talk to you later.
Wow.
Peace.
Under pressure.